What's the best medical MJ stock to buy? Well, in this video, we're going to show you why US companies are better investments than Canadian growers.
And the big question is this. The green rush was a $10 billion industry last year. Experts say it's going to be worth over $20 billion by the end of next year. How do normal people like us, who didn't cheat by being born into the 1%, how do we use the money from our own pockets and participate in this massive wealth creation event while building financial freedom for ourselves and generational wealth for our families? That is the question. My name is Charles. Join me
as we explore these answers.
For everyone who tuned in last week, we started talking about the American cannabis operators, and I gave some of my opinions, and I think Courtney, you gave some of yours, but I think we can all agree that the U.S. cannabis market is much more interesting than the Canadian market. And I think the goal for today, or what I'd like to cover, is I think what I talked about last week, I was going to look at all the U.S. cannabis companies and come up with this framework or index for valuing them. My enthusiasm got the better of me. But let me show you what I've been working on. And I think it would be a good discussion topic because I've got the start of, call it my index or my matrix, to try to actually figure out what these things are worth. Okay. And to kind of give you a background, Courtney, for everyone listening in, what's happened is up until lately, right, we've all heard about canopy growth, we've all heard about Tilray or Afria or Kronos, and the list goes on. And everyone's been saying the Canadians are going to conquer the world. And I haven't really been very bullish on the Canadians, at least for probably the last year or so, just because I felt that that was priced into the market. But the U.S. operators are another interesting market to look at, and there I believe are the ones that really, right, the guys that are in, like, the people who are actually playing the game in the largest market in the world are probably the ones that will likely over time, they'll be the ones that are probably most likely to win big in the space. Mm-hmm. So I said, okay, I think we had talked about, what was it, Danny Moses or something about how these U.S. guys, there's an undervalued operation in the U.S. guys. It might be similar to what the Canadian growers were maybe a year and a half, 2 years ago before the big leaps came. So I decided to kind of dive into them. I don't know if you can see my screen. I've got it shown right here. Let me zoom in a little bit so it's a little easier to read. I'll go to like 150%. But I started listing out, well, to begin, what I did was I listed out I found 10 or 15 U.S. publicly traded growers of different sizes. And then I listed them against basically you might call the top Canadian growers right now on the market. And I thought, okay, if I put all the data out here, there's probably some sort of pattern or trend that I might be able to follow. So from the beginning, I just looked at this easily saying, okay, let's just look at revenues, and I'm still compiling all this data. Let's look at a price to revenue ratio and see if there's a gap between price and revenue. And clearly, as what we've stated earlier, the Canadian growers are valued incredibly high, right? Canopy growth is at 45 times annual revenue. Aurora's at 42. Kronos was just reported. They're definitely a little bit more on the aggressive side. We've talked about CanTrust. I'd be curious to see their reporting. This actually would be updated, and I suspect their numbers might be closer to, say, this 25, and that puts them at a more reasonable valuation metric. I'll just highlight this a little differently on that side. But I really wanted to just say, okay, we had identified CanTrust as a good opportunity, basically based on the fact that all the hype was around all the other guys, and CanTrust was trading, in the sea of inflated expectations, relatively cheap at a 9 or 10 times price to revenue ratio. So my idea here was I was going to go look at some of these US guys and see if there were similarities or similar type trends to kind of catch some type of a relative valuation. And what I found thus far, and would love to get your feedback on this, was the numbers in the US are even crazier. They're all over the place. Primarily because, and I'm still thinking of what you said, you've got some guys who are maybe in one state, so they're at a much more reasonable valuation, but they're only in one state, while you have other guys who, you know, they've raised a lot of money, they've opened in, you know, 10 or 15 different states, and they're not really generating that much capital, or they're not generating that much revenue, but their valuations are crazy because people are anticipating the future earnings of when these states legalize, right? So that's kind of where I'm at. I've just been kind of looking through all this and trying to come up with a better metric. It's clearly revenue is not a good barometer at this point.
And you
as
know
much
what?
as
That's so problematic. I really think we need to really kind of dig in and talk about how revenue not being an indicator regarding a company's, you know, just kind of potential at all is a scary thing kind of in the world of, you know, investing, if that makes sense.
Oh yeah, no, I agree. Well, maybe let's dive into one of them. So let's just pick the first one. I actually happen to have their investor presentation handy. And let's take a look. On the right, it's Curaleaf, right? So that's our line. I'll highlight this line right here, right?
Mm-hmm.
And Curaleaf right now, they've actually done fairly well. Let me pull up their stock chart. Let me go find them real quick. Here we go. We've got Curaleaf. And I think you had talked about Curaleaf. Like you liked Curaleaf, right? Or you're still looking at them, or you're reserving judgment at this point?
They're on my radar. I think they have a lot of potential, and I think they're no canopy, so I'll make that very clear. But I think there is something to be had of a first mover, largest kind of elephant advantage in this particular space.
Well, if we were to look objectively, so let's look at Curaleaf. They're trading at around $9, and I don't have my graph on real time. Well, if you had gotten into Curaleaf when it first came out in December, and you're holding on to it right now, and literally in the past, over the weekend, this is because of the CVS deal, the thing's blown up, you'd have done relatively well, and now you're doing exceedingly well, right? You basically doubled your money in a month. Now, the question, and what's interesting is what you say is you say they're no canopy, but if I were to look at them based on their market cap against their reported earnings, which was, you know, reported as of Q4,
Mm-hmm.
they're trading at a 31 times price to revenue, and that's actually probably before that little bump.
Mm-hmm.
And if we look at Canopy was trading at 45. So like they're actually not that far off in terms of relative valuation based on revenue.
Correct.
Now, there might be more to it, and I think this is an interesting one to look at, right? So let's kind of look at Curaleaf. And on the right-hand side, I have, you know, all their stuff, blah, 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 you know, great opportunity. But let's take a look at this. They've got an existing footprint across 13 states. And I think it's worth talking about Curaleaf because right now, from a market cap, it appears to me that they're the leader in terms of U.S. companies, given their current pricing and everything on that front. So they're in 13 states. Let's see. Yeah, it looks like they have 42 active dispensaries. They're covering a lot, but a lot of this is, in all honesty, it's just it's potential,
Mm-hmm.
right? Because even if you were to look at like a market penetration perspective, and I have these numbers. Let me see if I can find what I did with them. View, zoom back to 100%. I actually had done this with Curaleaf did a nice little thing, I think, or I don't know if they did or somewhere else, but I've been trying to size out what is the value of the potential on the license perspective.
Okay.
Right? So it's like, okay, the Arizona market, I don't know if you can see, I've got some market size data. The Arizona market for 2019 is projected at 700 or 800 million dollars. California's 5.6 billion. Colorado's 1.9. So forth, yada yada yada, on that front. And if I were to sum up the markets, I don't know, this might be someone else's, but let me just kind of sum up these, call it top markets for 2009. It's still a $10 billion market.
Mm-hmm.
So it's like a market that's, still larger than Canada. But the company, in terms of actual revenue, and this is like, we're talking, it's a $10 billion market from 2018 or whatnot. The company only did 32 million in revenue, yet it's valued at a rate closer to Canopy, which in that same quarter did 83 out of the Canadian market, which today is like what, a $2 billion market or something. Do you feel like relative percentage wise, these US companies are valued, or their actual market share is dramatically lower than what the Canadians, what the Canadians are at right now?
By far. And
Sorry, pardon?
I said by far. I mean, and I think there was always an advantage with the Canadian companies, because I think even with Canopy, I think they started, or they're claiming their start date as 2014, but they were still operating under a federally legal framework. They were legal on the medicinal side, but they were not on the recreational side, but they still had something to kind of go with. Here, we don't have that at all. We still have this kind of very patch framework system, and I think that has a lot to do with the difference in the valuations.
Well, but this is interesting, right? And it boils down to, well, I guess I'm not ready to make a statement, but I'm ready to ask a question, right? So actually, I looked at the fine print here. It says Curaleaf's numbers, it's $7.7 billion of market, according to 2018. So you're talking potential addressable market that Curaleaf can cover of $7.7 billion, yet their actual revenue, the run rate is at 128 million. So if we just do that, let me just run some quick, let me just like do a quick little thing here. If I did 128 divided by 77,700, we're talking a very small market share, right? We're talking, these guys are less than 1.66% of the total addressable market.
Mm-hmm.
And the other thing to be mindful of is, yes, they're a small market, but that means there's 99 or 98.5% of the market that's being serviced by other people right now. So it's not like it's a new market, it's an existing market. Do you see what I mean?
Mm-hmm. Right.
Well, if you look at Canopy Growth's numbers at their run rate, and I think the 2018, let me just Google, I think it was like 2 billion, 2018 Canadian cannabis market. You know off the top of your head what the market size was for Canada in 2018? Was it 1 billion or 2 billion or?
Ooh, I don't know. That's a really
I think
it might have been because I know there was this 5 billion number they keep floating around, but I think that is 2020 or 2021.
Yeah, that's the CAGR of where it's gonna go.
Right. I don't remember what it was actually. I want to say maybe closer to 1 billion, because I think it was maybe like around like a 5 times.
Okay, yeah, that sounds. So let's just use 1 billion. So if I do 332 divided by $1 billion run rate or whatever that number is, or let's just do 1.5 billion because this is a blended average of a bunch of stuff. I've got a 22% market share company versus a 1.6% market share company. I don't know if you're following my logic or what your thought is. It's like Canopy has a much bigger share of their market. They're still going to get the growth.
Mm-hmm.
Curaleaf, there is greater growth, but Curaleaf also has a lot of existing competitors
Mm-hmm.
in their market, right?
Mm-hmm.
Yet we're looking at them, or I'm just looking at this like, how do I value Curaleaf? Right? Because basically the fundamental question we're trying to ask is, are they priced reasonably or are they priced too high? Right? If they're priced reasonably, we think they can grow. If they're priced too high, it's going to be harder to grow. So that line of rationale didn't get me very far.
Right.
So that one didn't work out. Yeah, this is industry overview and everything. So then you can get into like patient metrics, visits per month, or whatever, call it retail operations. But really what it boils down to, what I'm finding is what these guys are, the story they're telling, and the question is how to objectively measure them, is they're saying in our little patch, wherever we're at, so all these multi-state operators, very few of them are actually operating in a multi-state environment. Most of them have set up operations in one major state.
Mm-hmm. Which makes sense.
And so they've like proven their little unit model. And these are like, for example, this is Curaleaf. These are the brands. They've got 200 SKUs of, cannabis types. They've got a CBD product line that they've launched. They've got their wholesale line that they're doing. They've got cultivation and processing, blah, 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 blah. Like that's what they've got going on, right? And what they're saying is, today we only function in, going back to here, we only function in one market, really, maybe two. I don't know if Curaleaf's the best one, but we've proven ourselves in this market. We've gained some traction, and we're going to take our unit model and copy and paste it in all the other states.
Yeah, and I think that's the hiccup. I think that's the real problem, because you really can't copy and paste into every other state because of this patchwork of regulatory issues, if that makes sense. And Kush talked a little bit. Kush Bottles, they do talk about this kind of patchy framework also kind of in their business model, and that's kind of what they offer to, for lack of a better word, that's what they offer to the market. It's like, yes, we do bottles, but we also do bottles specifically for your state's specific regulation for this particular issue. Like, so that's kind of like their thing. That's like their value add. So I think it's very interesting that that they're kind of trying to do the cut and paste, but I also think that may be hampering their revenue growth, because you just have to kind of, not every state has all these licenses available. You have to bid for licenses, and even when you get the license, you still have a time to kind of get up and running, and then you may have to go through local and county ordinances. It's a lot of nonsense, if that makes sense. And I really think that really concerns me as an investor. Like, I really love these companies generally, because I think they have a great, I want to call them, not all of them, but some of them really have that first mover advantage, but it's starting to get very murky as they start to expand, if that makes sense. So their expansion is going to be hampered by everything else that's going around. Now, we do have S420 and then HR 420 to try to deal with some of these issues, more specifically the Senate bill, which is S420, trying to deal with banking issues, but we're still not quite there. And I think the SAFE Act I think we were talking about that last week too.
Yeah, that's the Banking Act that's supposed to solve those problems.
Yeah, when they're trying to do something, but we're still at a point where we're not there. And even once we do get some support, we're not sure what that's going to be. And it's just going to continue to really kind of act as a noose around these companies' ability to grow. It's kind of going to be like a tie off, if that makes sense. Because they're going to can't do anything anymore.
I agree. So I guess, so that's I don't want to say $1 million, or that is the big question, right? So we just looked at Curaleaf, and the story I gave you of Curaleaf was not compelling to you. You weren't that excited. Hold on, let me make sure I have the right screen. Do you see the screen?
No, I didn't.
Right? Like I just pitched you the story behind.
But they're still my favorite, if that helps.
Yeah, but that's something scary, right? Like I just pitched you on why, boom, this is so exciting, and you're even saying you like them, but then you're like, like, right? I mean, that's kind of a concern.
Yes, I'm usually like that with most cannabis companies. I'm like, I like them. I was like, I inherently like you. It's kind of like dating. It's like I inherently like you, but I don't know, like you have a girlfriend or something like, you know, really, like, that's a real non-starter. Like, you know, so.
Yeah. Well, I mean, so the thing is, what's interesting is it's generally the case, right? So if we go through Green Thumb, and I'll look through Green Thumb again, it's a similar thing, right? They tell you the story on how great cannabis is, blah 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 blah, and then they tell in terms of how they've done it. And in the case of Green Thumb, yeah, everyone's saying the same thing, right? First mover advantage, blah blah blah. You know, same story as Curaleaf, 800, you know, whatnot. But if you actually dive into what they're actually doing and going back into Green Thumb, you know, Green Thumb is primarily Illinois based.
Mm-hmm.
And at the same time, if you look at Green Thumb, right, Green Thumb is trading, and, you know, this data is like a day or two old, and they'll report, let me look, their reporting date's coming up in a couple weeks, but they're trading at 44 times their projected annual based on their last data set. Do you see what I mean?
Right.
Yeah, I mean, like literally, like these are revenues where, you know, sure they've definitely grown a lot, but it's like, how do you go it? So what I was doing was, okay, maybe like if you look at Green Thumb has basically been operating primarily in Illinois, and then they've got Illinois, and they have some retail operations going on in Nevada and a few other states and everything on that front.
Now, I am interested in the fact that they're getting into the New Jersey space, because I think they're going to try to really move that into the recreational space, because that's where Jersey is. So I think it's interesting that in 18, if you see their numbers, they jumped into Jersey. And I'm like, okay, so I see that you kind of have an idea of what you're doing. But I'm not really sure what that all means in the grand scheme.
And this is what's interesting, and I'd love to get your opinion on this. So, you know, I'm going through all these guys. Everyone's got their story. You know, there's Acreage, similar thing. I mean, if you look at them, they've got plans of world domination, and, you know, similar right there. They've got, you know, 13 states, 11 states, 12 states, not very many dispensaries. I'm basically going through and looking at, okay, do they offer other services to try to like get a better metric of who's for real and who's just, you know, who's just a good story. Do you see what I mean?
Right, I see.
And then on the extreme side, there's Ianthus. Mm-hmm. And Ianthus is, you know, selling the story, 121. They've just, you know, they're selling everything, and they're doing some M&A, but their revenues are essentially almost non-existent. They basically just merged with the company and added it. But like these, like, do you see what I mean? Like, this is all just like, hey, I've got a bunch of licenses and I have a small little operation. Do you see what I mean?
Right. But I think there's two. So let's put it in perspective, because I think looking at the Green Thumb presentation, I love it when we have the conversation of putting these companies in the space that they belong, which is kind of like the vice space. We're looking against them against alcohol. We're looking against them about like looking in terms of in reference to tobacco. But the reason why I think that's important is that when prohibition and alcohol stopped, they allowed each state to kind of regulate their own thing. And one of the things that they regulate, or most states that regulate, they give licenses. So the licenses, especially like when we look at licenses in Pennsylvania, somebody will say, hey, I have a liquor license for sale for $100,000. And I think that's kind of the play they seem to be trying to make. They're trying to get themselves in a position where they have licenses, and that they may be, instead of them actually using them, they're probably going to end up starting to sell them. And that's where their revenue, I think, is going to come from. If that makes sense.
Oh, wait, so that you think they're going to actually take the licenses they have and then flip them to the next guy?
That's what I think's happening. Because remember, there's a limited amount of licenses. Most states have a limited amount of licenses, and because of that, you have that scarcity issue. And then you're able to kind of say, hey, you want to start this? I already have a license. I can give you mine. Or not give you one. I can sell you mine. I think that's really kind of keeping that stockpile of licenses is what they're looking to do. Now, is that strategy going to work? I don't know. But I think there's something to it, if that makes sense. At least that's the only thing that makes sense. Looking at their model right now, that makes sense to me of why they're positioning themselves that way.
Definitely. So now as I was going through this list, and I'm not saying one of these is not like the other, or anything, but I did find one that really caught my attention. It is a little, not like the other. Okay. And it was this company called Trulieve. Are you familiar with them at all?
Yeah. Did we talk about them at all last week?
We've talked about so many companies. They may have popped up or
briefly. I think it wasn't even anything longer than 30 seconds.
So, okay. Yeah. So Trulieve to me is fascinating because in the state of Florida, they are the big dog dominating things in Florida. Now, not sure if this is 100% true, but in 2000 and based on their latest investment deck, in 2018, they had 65% market share in the state of Florida. So that to me is pretty darn impressive because you've got a big state. Yes, it's medical. It's not pure rec or whatnot. But if you can garner 65% market share in a market that, it's not like there's no competition. There is limited competition. Do you see what I mean? Right. Mm-hmm. If you can get 65% market share, there's something about what you're doing which is better than everyone else. Correct. And, if you dive into their presentation, they look good. They do all sorts of things. It's like everything, but so it's a well put together company, but specifically speaking, what they've done is they have focused on just the Florida market, and through a combination, I don't know if it's focus or operational excellence or expertise, they've killed it. And what's fascinating is if you look at their revenue numbers, you got a guy like Trulieve, which is just focused on Florida, versus you might look at like Curaleaf or Acreage or Green Thumb or Cresco that are spread across, or even MedMen, who's the other kind of big guy that are spread across, a multitude of states. Mm-hmm. And Trulieve is putting out that same amount of revenue. So now what their pitch is, they're saying, hey, rather than trying to go wide, we've gone deep. And now, rather than just trying to go grab, 20 different states and get a bunch of licenses and do this land grab and everything like that, we are focusing on doing a really good job here. And now they're looking to export into 2 other initial markets where they're looking to, break into Massachusetts and then apply their model to California.
Okay.
So this becomes interesting from, I don't know if this is a different weighting scale or whatnot, but I feel if I compare and everything, let's compare, say, Trulieve against, Cresco or Trulieve against Curaleaf or whatnot. Geez, they all have some sort of leave in their name. Curaleaf is trading at almost 3 times the valuation of Trulieve, but Curaleaf is in Florida, and Trulieve is in Florida, and Trulieve does a better job in Florida than Curaleaf does, and Curaleaf does almost across the entire country.
So the riches are in the niches.
So then, does that mean that maybe Trulieve is better? So this goes back to the question, right? Is Trulieve better positioned? Is Curaleaf better positioned? How do we go? Do we have to add a metric to this for valuation purposes like there's some sort of handicap here, I think, that True Leaf should get. So even though they don't have the same number of state permits, they're doing much better in a permit, right? And ultimately, a license is just the potential, and there's nothing like results that tell you how good or bad it's going to be, right? Because like on the Canadian side, we can look at Kronos Group as an example also, right? I mean, Kronos has the song, it has the story. It's going to go conquer the world supposedly with the Altria investment, but if you look at their numbers, their numbers they missed their Q4 revenue, but I think it was like 6 or 7 million or something like that. I don't know the exact number, but it's not even a tenth of Canopy growth. You know, well, I guess they're worth a little more than a tenth of Canopy growth, but you see what I mean?
Right. Well, I think Kronos and to your point, let's go back to a second. One of my things about Canada is that it's completely overvalued. Their valuations make no sense. But I think the real value and the real move on at least Kronos, at least Canopy, I don't think those investments that were made in 18 are actually going to come to fruition and actually kind of show up on the balance sheet as a real tangible thing until about 2021. So, and I think that's kind of the play that they were making also. So my question is that, yeah, I think Kronos, you're probably going to miss your earnings because there's just a lot going on up there. And they still haven't been able to deploy what they're supposed to be doing or where their main money is, which is not in which is in edibles, vapes, and all that. And they still haven't gotten there yet. And they won't get there until I think October of this year.
Yeah, I mean, and that's best case, and obviously there's always delays and there's always issues and stuff, and yeah.
So I think holistically, I think we have to kind of use that model and say, okay, now we're kind of looking at the U.S. and can we superimpose any of these ideas onto the U.S. companies to kind of just back into something? Because at the end of the day, I still have nothing.
Yeah.
I feel like I still don't have a great. I mean, my ancillaries, I love them. I think they're great. I think they do provide, like when I say ancillaries, I mean like a Kush bottles or some type of associated non-pure play. I think they're great. I think they work well. But here, I just can't seem to get my feet together or my moves together to actually kind of plant my feet with a U.S. operator still.
I see what you're saying. Now, I still believe there is value. I mean, there is value in the U.S. operator, but how does one go about? I mean, like, I guess now if I were to step back and look at this, licenses are important, right? You need to get licensed. You need to get breath. You need to have all these sorts of things. But ultimately, what's going to differentiate the winning, like if we were to go back and look at these operators, and there's probably more that'll pop up, right? Right now, these were the top ones I found, and I've sorted it based mostly on market cap, even though I had a typo on True Leaf's market cap. So like these are call it the top, $1 billion plus US operators. Mm-hmm. Now, all of them, to justify their current market capitalization, they have to get to, I mean, maybe they have to get to hundreds of millions in revenue. Otherwise, you can't justify the valuation of a $1 billion market cap valuation. Maybe 4 times annual revenues is the highest amount. Like they've got to all become, Curaleaf has to become $1 billion company for it to even, satisfy the existing shareholders. That doesn't even account for growth or anything on that front, right?
But I think this also kind of gives us back to the place where we think that the market overall is overvalued. So I think kind of in the cannabis, I think we're starting to look at a cannabis bubble, because I think we're assuming that these numbers are going to stay the same in terms of the valuation gap between the valuation and the revenue. We're assuming that those numbers are going to be so far apart, but I'm not convinced that they are, honestly, for that much longer. Because it's not sustainable. I guess my point is this particular system is unsustainable, looking at it saying, okay, these companies are going to have to reach this number to actually justify this valuation. And that's, and at the multiple that number is, it's highly unsustainable. And that's kind of the quintessential bubble, if that makes sense.
Oh, so you're saying these US guys, they're just too expensive.
I think everybody's too expensive. Everyone's, but yes, I agree. Yes, everybody's too expensive. And I just feel like everybody's excited. And I think this is kind of that market euphoria again. But I think we're going to have some real hard kind of come back to normal stuff.
So it's like, it's almost a year and a half ago when Bitcoin was at $15,000 or whatnot.
Right.
And you're saying that now is the time to actually not be looking at cannabis operators.
So here's the thing. I think we should always look at them because I think there's always going to be an opportunity. You have to be poised and ready to make an opportunity. But I don't think that means that you kind of pick every daisy that comes across your way either. Does that make sense? So I think even when the market was crashing, I was still investing because there were certain opportunities that I saw. I was like, oh, that's an opportunity. That's an opportunity. I see an opportunity, but I had to be tuned into the market to see those opportunities. So I'm not saying, completely step away from it. That doesn't make sense because prohibition is going away. Marijuana prohibition, cannabis prohibition is going away. So you have to kind of be in tune to everything that's going on for this all to make sense. But that doesn't, again, mean that you pick every daisy that you see.
Yeah. Huh. Interesting. So the question is there a diamond in the rough?
Mm-hmm.
Is there and I liked CanTrust, actually. I thought that was a pretty nice daisy that popped out of nowhere on that. But how would we go, or how would you, right? So if you go back to my chart I'm putting together, I'm trying to come up with some type of relative valuation, where it's like I'm looking at like number of licenses versus active dispensaries, and maybe I would do a ratio of like market cap per dispensary or market cap per license held, or kind of market cap per pot covered. You know what I mean? But you can't even look at it by a state. Also, because one of the things I've noticed when I've dug in here, like someone says, "Hey, we have a license. We have operations in Illinois, and Illinois is a massive state because there's so many people." But then you start reading the fine print. There are dispensaries in southern tip of Illinois in a population town of 5,000 people. There's a lot of cows and farmers, and it's like your dispensary is just not going to support the revenue, right? Versus a dispensary in downtown Chicago.
True. True. I think to answer your question, like how do we look at these companies? I would love to do a revenue per dispensary kind of model to see kind of, okay, you have 72 dispensaries, you have an overall revenue of X. And then I would see from there what the market cap revenue ratio was. And I think there's something there between all of that. Because my question is, okay, you're in all of these states. So let me back up for a second. My first thing is that you're in all these states, but are you as profitable as you should be with each of your dispensaries? Now, we may not know dispensary, number 1 versus dispensary number 36, but we can at least have an idea of everything that you have, how profitable are you on those? And I think then we can kind of look into, okay, here we are on market cap. Here's our market cap. This is kind of where like maybe market cap versus dispensaries or something like that to kind of put everything level. Because I think even with that leveling out, I think our more concentrated companies are actually going to do better, if that makes sense.
Well, there's something. So what MedMen has done is they claim their sales, they're going by a metric of sales per square foot. So they're saying, MedMen California, because of all this other secret sauce, blah, 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 we have an $8,000, almost a $7,900 sale per square foot number. and that's our competitive edge. And that's 50% better than Apple, almost 3 times better than Tiffany's, and significantly better than Starbucks.
No, MedMen. No.
I'm not saying that's good, but I'm saying that's their pitch.
I see that, and I'm looking at it, and I'm going, no. It is like I'm rooting for you, but when you put up these numbers and these kind of, okay, Tiffany's, you're looking at Tiffany. So Tiffany, first of all, have you been in the Tiffany's? There's a lot of space in Tiffany's because they don't want you. I don't know if you've been in like your neighborhood jewelry store or kind of like Philly has Jewelers Row. They tend to be very, very small. And one of the things that, which, you know, in comparison to Tiffany's and King of Prussia, it's huge. It's just
okay.
Experience. So they're kind of saying, well, you know, versus us and Tiffany's, like, no, y'all, that's not their thing. It's coming into Tiffany's isn't what I would call a MedMen or Apple experience. You know, it's just not that. I mean, and it just, as you can see, I'm flustered. Like, I'm just so irritated with those. And I mean, and I get that they're searching for something, and I get that they're looking for differentiation somewhere against something that everybody seems to know. But Apple is also like, do you know how much space is in an Apple store too? And
I like I said, we're discussing this, right? And some of these are a little insane, right? So MedMen's not the only one. Cresco has also taken that route. And if you were to just go by revenue per store, you know, MedMen's at $7,900 per square foot, and Cresco's at $6,500. It looks like, I don't know if one copied the other guy or who started it, or maybe it's a consultant selling on both of them or whatnot. Well, the Starbucks number is a little different.
Yeah, the Starbucks number is a little bit different. So there's a footnote though.
Yeah.
Okay, so
but there's, you know, these guys are saying a similar thing. Hey, you know, Cresco, we're so good because we're at $6,500 a square foot is our average revenue per square foot. But then someone might go look at MedMen, and I'm not saying MedMen's a bad company or anything, but they've had their share of challenges, right? And if that becomes our metric, why is Cresco actually valued higher than MedMen? Despite the fact that MedMen has more states, has more active dispensaries, has more access to licensed dispensaries, and has significantly higher revenues than Cresco.
So now in my head, I'm going, this is actually like my thing. Like, I'm actually going to find a way to measure these companies in a meaningful way that doesn't get involved with all this crap fluff. Who does this? Oh my goodness.
Well, that's why I thought it'd be a fun conversation. I told you last week, you know, I started getting in the rabbit hole, and I just wanted to share this with you because I knew it'd get you going. And you're just like, ugh.
What are we doing? Like, come on. It's like, I don't know. And I love Kush because I've read a lot about Kush, and Kush's CEO makes a very good big point about, I don't want to be looked at as a stoner. I want to be looked at as a businessman that I have a viable, you know, profitable business, and whatever the case may be. I don't know. I can't say profitable, but you know, I have a viable business. I have a viable business model. You know, I'm here to stay. And he kind of carries himself this way on purpose. But then when I look at like MedMen metrics and Cresco that comes up with these kind of pie in the sky things, I'm like, guys, I was rooting for you. I need you not to do this. I need you not to minimize like really what we're doing and what you're doing by kind of trivializing it and relating it to jewelry, Starbucks, and I don't know, computers. Because that's not what it is.
Yeah, no, it's totally different. So,
and I think they can't.
Yeah, I mean,
the ones that I would look at if they said, hey, this is us versus CVS. I'm like, okay, well, that's something there. But I don't think they can do that and get a favorable number. So you're kind of cooking, I don't want to say cooking the books, that's not what it is, but it's like you're cooking the numbers to actually be favorable to you. But I think, you know, you should be able to see through that.
I mean, the stores do kind of look, I mean, you look at the inside, and again, I've never been to either a MedMen or a Cresco store, but you look at these.
It's on my list.
They look beautiful. Like these are kind of Apple Store like insides, right? I mean, look at that. Yeah. Oh.
They look fun. I mean, they look. I would go to this, and I actually would like enjoy my experience there. To me,
Yeah.
it seems like they're.
They look at this, and you're like, oh, come on. You know, $8,000 per square foot. Look how great we're doing.
Right. So it's kind of, you really have like soured the pot on something you didn't even have to go to. Like, I was with you. I was rooting for you. I'm loving your whole vibe. I get it. And then you do this. And it's like, but I get it. And if you were honest, and if you were honest kind of in terms of your marketing and positioning, we could probably say, okay, you're not going to do as well as CVS, but how could we get there? And if you said in your conversation, we envision us being a CVS or on this level in XYZ amount of time, then that's a completely different model that we can actually get behind and rally behind.
Mm-hmm.
So, but
so, you know, they're saying because of MedMen's stories, they're all about depth versus breadth, blah, blah, blah. They've killed it. They're the leader in California, blah, 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 blah. You know, that's that. So another angle I was looking at, and I'd love to get your opinion on this, is others. Let me see if I can find another presentation. Maybe others, what they've been doing is they've been talking about their production capacity. Let me see if I have an example. So on the right, you see Cresco, and what they're claiming is they have massive facilities that are able to just produce in huge amounts, right? So they're going to go from 427,000 square feet to 950,000 square feet. So by year end, they'll be literally at 1.4 million of capacity. So they're playing the capacity game and saying, hey, compare us. Like Canada's run into, like, there's just going to be so much demand for this stuff that it will buy it. It's basically like, if we have it, they will come. And that's another way they're justifying their valuation, because they're saying, hey, we're capacity guys that can produce everything on that front. I'm trying to see if anyone else does the capacity play. But Cresco pushes that pretty hard on their investor presentation.
Which makes sense.
What do you think? I mean, is that a valuable metric? Like they're the ones saying, hey, look at us, look at Ianthus, look at, you know, Truly, look at those guys. They're only in the hundreds of thousands of square feet, and we have a ton of it. Like we can produce, by the end of 2019, we'll be able to produce almost 10 times the volume of cannabis as Truly.
So I think that's cool, but now we start to get into a supply and demand issue, because if you don't have the demand, and what I mean by demand, like everybody's interested in cannabis, but if you don't have the mechanism to actually put the supply where the demand is, all of that, you know, capacity goes to waste. So yes, you have the potential to do something, but my question isn't necessarily what you have the potential to do, but where can you deploy it in a way that's going to make money, significant money on the revenue side, if that makes sense. Like, yeah, I just feel like these pie in the sky metrics are very frustrating to work with, because you can't really get to where we need to get to because you're so busy, kind of gassing me with something else.
No, it's definitely a concern. So, like, just to give an example, going back to Cresco and Trulieve, Cresco is trading, well, if you look at the companies, Cresco is worth significantly more than Trulieve, almost $600 billion more than Trulieve.
That hasn't been on my radar at all. So that's pretty cool.
Yeah. So Cresco's there. Now, if you look at their projected 2019 revenue, A versus B, they're both about the same.
Okay.
So both of them are projecting 2019 in revenue, but Cresco is basically trading at a 40% premium over Trulieve. 7 times annual 2019 versus 10 times. Maybe it's a 30% premium. And if I were to differentiate the two, what you have is Cresco has 10. Trulieve actually has more active dispensaries, but Cresco has more footprint into states than Trulieve.
Okay.
You see what I mean?
Yep, I see that.
So they just have more state footprint, and they're building a larger cultivation facility where they're claiming, they also even claim a 10 times capacity. So maybe they've got a technology aspect of it or whatnot, hard to say. But they're claiming cultivation capacity of almost 2x what Trulieve has. And does that, because I would look at this and say, I'm not saying 2019 is going to be the answer, but by 2019 revenues, like that's a reason, like that's kind of like 2018 revenues for Canada, right? 2019, fiscal year end revenues. That projection is a reasonable valuation number to kind of say, okay, now you've had some time to actually be in the market. Your dispensaries have been deployed for, a year and something, and if you're actually going to make money off those dispensaries or if you don't know what you're doing. See what I mean?
Mm-hmm. Yeah, I'm with you.
So some food for thought, and maybe next week what we'll do is we'll think about it more and dive further into this discussion, right? Is it revenue per dispensary, sales per square foot?
I'm going to come up with something.
Valuation per pound of production. Who knows what it's going to be?
And I mean, I think, I don't know. I only want to know what your money looks like. I honestly, I think you can always do like a check plus for kind of these things that are in the pipe, but I'm only paying attention to you if you have like decent revenue.
Well, in the end, let's step back. In the end, 5 years from now, for the company, the winner is going to be the guy that has the revenue, right? That's all said and done. It's the dollars that make sense, right? You could have all the technology, all the exciting, song and the dream and the story, but musical chairs eventually ends. And to have a $20 billion, right? We're talking about a market that hopefully in 5 years, this market will be, if we believe the numbers, $40 to $50 billion in the US, right?
Right.
And in all these markets, I think what we are all betting on, or what we're trying to figure out, is there's probably the market leader will probably in 5 years, I'd be willing to say that the market leader would have 20% market share.
Okay.
So there will be like a big guy, kind of like the equivalent of the Walmarts of the world or the Starbucks of the world, that is doing, $10 billion of revenue, of cannabis revenue in the US. Like that's like the nationwide chain.
Okay.
So the guy who, if they're doing $10 billion and looking at what alcohol trades at, or what some of, tobacco trades at, a 4x annual, it's like 3 to 4x annual is kind of what the CPGs run at.
Mm-hmm.
So if they're doing $10 billion, then that company would have a market cap of say $30 to $40 billion. Okay?
Okay.
And if you and the way I see it, and again, this is just my conjecture, these are all companies that are worth anywhere from $500 million to $4 billion on the high end. But one of these or two of them, because there's always going to be like, there's McDonald's and Burger King and even Wendy's. Like it's not like a zero-sum game. Right. There will be multiple players.
Right. Like a Pepsi to Coke.
Yeah, like a Pepsi to Coke. One of these 5 or 10 that we're looking at, or maybe one that hasn't popped up, one of them is at least a 10-bagger, in 5 years from now, right? Even at a $3 billion market cap for Cresco or MedMen or whatever, if Cresco becomes the dominant player, or MedMen does, or Green Thumb, or whoever the heck it is, they'll be worth $30 or $40 billion if they're doing, 10 or 15 billion in the market. You see what I mean?
Mm-hmm.
So the question, though, is we don't know the answer, because if we had the time machine, we wouldn't bother with diversification. These discussions would be moot. We just put all our money on the one. what are tea leaves or what are indicators that we can find that might help us differentiate who is ahead of the pack and who has the probability to separate themselves, right? Like it's no different than the phone guys, right? If we go back 20 years ago, Apple was just one of many smartphone phone manufacturers, right? There was no Kia. They're gone, right?
Yeah, I love them.
There was a bunch of those guys. So
I didn't like them as a stock because I've actually looked at the stock a couple times. It wasn't good, but I liked the phone. I liked the phone a lot.
yeah, I mean, the phones were great for a period of time, but as a stock, or it's the smartphone versus the BlackBerry. Which one's a BlackBerry? And again, BlackBerry as a stock hasn't done that great either.
And I think but I think this is a good point. Just really, when we look at companies generally, is that are they able to adapt? So, and I just feel like BlackBerry doubled down for a while. If you remember when kind of the smartphones and like the kind of full touchscreen kind of thing started to take off with.
Yeah, and they went the other route and kept their scroll pad thing for a while.
And I broke a BlackBerry ball before, and it's a disaster. Like I don't know if you remember you had to scroll around on the ball, which was cool, but the ball came out once, and it was like it was terrible. Yeah. Like I didn't even like you had like little like arrows, but it just quite didn't get there. But again, like I said, it's about adaptation, and I think that's some of the things that we should be looking at, even if when we come up with our metrics, what we should be looking at moving forward with these companies is that are they able? Do they have the ability to be nimble enough to adapt? And I think, honestly, your True Leaf is going to be a lot more nimble than, say, your Cure Leaf. And the reason being is that they're concentrated in a smaller space.
Well, let's think it over, and we'll tune back in next week and see how it goes. So everyone who's still in, thanks for tuning in. And until then, we will see you guys around. Talk to you soon. Bye-bye.